Welcome to Accendo Traders Group. This is our video trade plan for Thursday, May 15th, 2008. AccendoTraders.com, effective trade plans delivered daily. And as we go through our routine each night to prepare ourselves for the trades, here's what we do. Our news participants, go ahead and start the video here and just kind of see how we prepare ourselves for each day. And as always, we want to make sure we have time for friends and family. So today in the market, we saw the April inflation rise less than expected. That kind of sent the market off very nicely. Also, we had a smaller than expected rise in crude inventory. Freddie Mac reported a smaller loss than expected. You can see that we had 9 out of 10 sectors, but look at the day. It really ended up being a blah day, and we'll talk more about that later. But because the market was up higher, we kind of sold off, probably some technical selling. Macy's reported better profits, and then we had some negative profits, or at least the traders took them negatively with Deere, EA Sports, or EA Gaming, and Whole Foods Market. And then we've got some upgrades and downgrades. There's FLR, one of our stocks we like, and obviously with the big move that it's had, you had to expect a pullback. So that's what happened today. Tomorrow we have some news. We got initial claims, job claims. We got the New York Empire State Index, and also the Philly Fed. On earnings, we just have JCPenney's before and Kohl's after, so there's the retail sector. Autodesk also after, and we have our series of splits. So let's go ahead and take a look at our flag list from last night and talk a little bit about today's action. Okay, so here we are with our flag list, and you're going to see that I'm really not going to unflag anything for right now. I unflagged CLNF because it's splitting tomorrow, and we want to see what's going to happen there. But for the most part, I'm not going to unflag anything. This might be a good time for you guys to consider getting the podcast version, those of you who are just watching the YouTube version, because I may add some changes as I go through this. But the theme of the day is we have some double tops here. Double top on the Dow, forming. It's not there yet. And same thing here on the SPX. Also with our indexes, if we could take it to another look here on this template here, you can see where did the NASDAQ fail? Well, once again, we're failing at the 200. Dow Jones, where did we fail? Well, once again, we're failing at the 200. So when we said we had a technical sell-off where the sellers are selling off, well, they see this resistance of the 200. We ran up there close to it and sold off from there. So what does that mean for tomorrow? Well, we have some economic data tomorrow. New York Empire, we got Philly Fed, we got jobless claims. We got a lot of data out tomorrow. Not too much on the earnings front, as I mentioned. JCPenney's before market open. Will there be a catalyst to push the market above the 200? I don't know. We'll see. And more importantly, we'll see how traders interpret any data coming out. What I also want to show you real quick is just, again, looking at today's momentum and looking at what the bears did today. We're moving along fine. And then look right here about 115. Suddenly the market just kind of falls right off the cliff. The market falls right off the cliff at 115. Let me do this one more time. Had to change my template here. And you can see that it falls right off the cliff basically to the 50. Same thing here on the Dow. Same thing here on the NASDAQ. And, I looked, for news, and you can see the NASDAQ is even more closer to this uptrend line. And I looked for news, and there really wasn't any news. So, again, it's really just a technical sell-off. But we had some definite momentum on that. I mean, we really just fell off. So again, we'll see if the news of tomorrow can be a catalyst to keep us moving higher, and we may need to begin to prepare ourselves for going into some bearish trades. If the indexes come back here to the 20 and break the 20, then that's when we really need to consider bearish trades. 10s really support, but if we break the 20, we're definitely going to go bearish again. We started to go bearish at the 10, and you can see we rallied. Let's go to the S&P 500, and this one's really clearer on it. If we break the 20, it's really when we're going to consider going bearish on a market again. Okay, so again, as my theme, we're going to see some stocks rallying nice and giving us a pullback. the double-edged sword of that is that we have some good entries tomorrow. If the market's up tomorrow, Apple is a great stock. We have a catalyst with Apple. We have the conference next month. We've got the new iPhones next month. We have the Mac tablets, the rumors. So we have a catalyst for this to keep going. And but that's only if the market's up. Remember, if the market's up. Same thing down here on NSC. If the market's up tomorrow, we have a great uptrending stock to get into. The other theme is we have some double tops going on here. Look at ACI. Look at AKS. We have a lot of double tops forming, and that's bearish. So I'm not going to unflag things as of yet, but you can see that we need to really see how the market opens tomorrow. Remember amateur hour with the first half hour. We don't want to get anything just because the market's moving one way or another in that first half hour or so. So we want to be careful with that, but at the same time, we may have some great entries tomorrow, and we can go with the conservative entries that we set yesterday, or we can be a little bit more aggressive if you want to be, and go with playing some of the bounce of today's downside move. So with that being said, I'm going to stop here and begin the next session where we're talking about new stock. And again, in the new stock section, I'll talk more about how I'm specifically going to be looking at some new entries and how I'm going to look at these existing stocks. Okay, now we're ready to begin the education part of our video. Trading in a Zone, Mark Douglas, in the beginning of the book, talks about the shift to mental analysis. And yes, not the day before yesterday, we were talking about confidence and fear are contradictory states of mind. So at one point, it's, you're trying to have dual personalities here. You want to be confident in your trading, but at the same time, you're scared of the reaction. You're scared of losing money. We've all gone through that. I've had my finger on the left click button ready to take a trade, and I've waited, and some trades have gone on without me, especially a lot of the Fed moves where, they say the first move is the right move, and there's all kinds of, he say, she said type stuff. And there was a couple times I remember I was watching Goldman Sachs, which is going to react well to the Fed move. And, I just watched it and I watched it and I watched it and I kept waiting for confirmation. I would get it, and I was waiting for more confirmation, and I would get it. And eventually it had moved, $2 or, so, I was confident of what I was seeing, but my fear of the potential reaction was holding me back from actually clicking and hitting that button to say, go ahead and make the trade. So, that gets down to the point of learning how to analyze a market is not enough. I can read these signals left and right. That's not the problem. We all have signals, indicators that we like. We have entry and exit points, but sometimes we just freeze and say, exactly, we just freeze. So, we have two choices, he goes on to say. We can choose to eliminate the risk by learning everything possible, learning Elliott wave, learning, the cues, learning all these different strategies, indicators, systems, whatever. Or we can redefine how we think about the market, and we can then learn how to accept the risk and no longer be afraid of the results of our trades. When you eliminate the potential to define the market as painful, then you eliminate the tendency to rationalize, hesitate, jump the gun, hope the market will give you your money back, or hope that the market will save you from your inability to cut your losses. Again, when you have a system in place and your system is what it is, and you're no longer operating in a stance for fear or a stance of hope, I hope this goes right, or I hope this goes this way or that way. Again, that fear can cloud your judgment. That hope can cloud your judgment and have you stay in trades too long, have you get in trades too early, have you emotionally, and again, I can't say this enough. I have never made money on an emotional trade. I have never made money not cutting my losses. I have never, any emotional decision that I've made has always cost me money. As always, to get the full version, you can subscribe to our podcast. There's the link for you right here. If you want to provide feedback, we appreciate that. There's a link right here. And to get more of some of the text behind what we're talking about with trade plans, you can visit our blog. Thanks, guys. Trade at your own risk, and I will see you next time.